In this video, guys, we're going to look at bear market observations. Stay tuned. Hey guys, warm welcome to you. Alright, so these are my observations having traded through a bear market about how the differences are, what we can see, what you can expect, and also potentially to be prepared. Now, this is a prediction whether we are going into a bear market now or not. I don't really care whether we do or we don't, as long as we have some volatility. You like volatility, I like volatility, but perhaps you've come to this video maybe several months or years after I filmed it and we're in a bear market. If we are, then hopefully you're doing well out of it as a short-term trader. But let's have a look at some of the attributes from my perspective from a bear market. Number one, the biggest thing is that rallies are strong and sharp, and they're never the bottom. They will be eventually, but when you get that bear market, you might get 1 or 2 days of absolute really strong move. Very, very strong move. 1 day, 2 day. Always looking to sell into those rallies, guys. If you can take money off the long side, then fine, you're a brave trader. But the opportunity comes from selling into those rallies, because this is the beauty of this, is that when we get this condition, and listen, okay, I appreciate that it's difficult to know if you're in a bear market, which is why you wait for a longer kind of move lower. But these rallies will push aggressively off the lows. Everyone will be calling for the end of the bear market. Everyone will be saying they're geniuses for buying the low, and then eventually they'll roll over and they'll just take out those lows, and it will fuel to the fire because the big money's just putting more sell orders in. The shorter term traders who bought those lows are coming out and are puking it out as they break through the lows, because the obvious place for their stop is under those all-time lows or historic or bear market lows, whatever it may be. And so it just adds fuel to the fire. So if you're short, you've got to be very careful of either having enough room in your stock to allow for this, or having something in your strategy that allows for it, whether you come out and come back in, whether you wait for it to get in, that kind of stuff. But they're often very, very strong and sharp, and they look like a bottom, but they're not. And you get multiple kind of iterations of these throughout the whole period of the bear market. Number two, markets sell off heavily into the close. From an intraday perspective, very often this is the case, you might well find that it gaps up a little bit, or it gaps down a little bit, and maybe get a bit of selling, get a bit of kind of, not every day is a brutal, aggressive down day, guys, but when they are, you get that last hour, 2 hours, and it's relentless, it's relentless, it's relentless, it's relentless. And the one piece of advice I give myself to remember is, if you are short on an intraday basis on a very heavy down day, you sit on your hands and you don't touch that mouse until the closing bell, because the stretch it goes is just phenomenal. You don't believe it will go that low, and it's going low, it's pulsing lower, pausing, it's pulsing lower, pausing. You're getting sweeping red candles, another 100 points on the Dow, another 10 on the ES, just going down, it's coming back up, creeping, then another leg, and it's just like a wave after wave. And you know, often you'll see your chart, and then you look at your chart and you'll go, oh right, yeah, look, you know, oh wow, we've come down to here, and you think, oh, that's really, really a lot. And actually, at the end of the day, the chart looks like this. You know, that was that point here, and it's like boof, so that was that, and you just really sort of extends it by 10 times the amount. You thought it was down lower that amount. So if you are day trading and you're short in the bear market and it's into the close and they're selling, just sit on it. Very occasionally you're going to get snapped back at the close, fine, take it out of break even. But honestly, when you're on the end of something and it's just pure selling, supply demand shifted, just streaks of red hitting the market, you want to be holding that for as much as possible. And if you can do, it's adding to the position. Number three, price goes way lower than you expect. So it's from a broader perspective on a daily chart. Always the case, guys, is that price goes way lower than you expect. You're like, oh wow, your favorite stock is at this price. That's a bargain. It's not been there for ages. It's just the beginning. It's almost like this, but on a daily. You think, oh, it's a great price. It will go lower. It will go lower. It will go lower. Don't forget, you know, if you can imagine there's a mean of valuation, I'm not a fundamental guy, but if there's a mean and we say we're frothy, you've got to not only come back to the mean, but you've got to overshoot to the downside generally in a bear market. And there's situations where, you know, stocks are trading so low, they're trading under asset value in some cases, some smaller cap stocks. That's how kind of crazy it sometimes gets. It's literally people with a different motivation for selling. I need to keep this fund alive. I need to do this. I don't care what I get on this. I need to sell this because the fund's going to go under if I don't. And the motivation becomes different, and you start seeing stuff way lower than you've ever seen. And you'll see Number 4, as media calls for the end of the world. In other words, the news is so negative, it's ridiculous. It's like, oh, we could be into a Great Depression, we could be into a 50-year this or that, we could be into this could be the end of kind of currency as we know it, capital is frozen, and they will put a massive spin on it, and they will say how deadly it is. You've got to numb yourself to that and say, listen, this is a bear market, it will end at some point. While it's an opportunity here, okay, appreciate some of you might just be long only, waiting for the point when you're buying, but if you're trading on the short side, you're trading continuing on the short side, but being aware that there will be likely to be a bottom at some point, and ignoring the media because they're so bearishly brutal and this and that and the other. Going back to this point number 3, they were saying, oh, so-and-so stocks, it's never seen levels like this before. What does that mean for this and that and the other? And they'll have a talk head on that talks about how it's the end of them and this and that and the other. Or you'll have someone on saying, oh, it's a great value play. It's such a good value. We've not seen this for a long time. They've got this and that and the other. And yeah, it may well be from a kind of logical perspective, but that thing could still halve and still be a good buy. They're still doing exactly the same thing. It's just sentiment around the company, around the market rather than the company, should I say. So being aware of that. So media calling for the end of the world and just being cautious that these guys are just looking for clicks, obviously. And bearing in mind as well, a lot of people, investors, longer term investors, will be panicking out based on what they're reading in the media. Not to say it's a bad thing, because if you come out early in a bear market you can buy lower, but then if you're holding for a 20-year period, you might have to sit through 1 or 2 of these. Number 5, guys, everyone calls the bottom and all are wrong. This is classic. Every single push down will go, that's the low and I'm in. That's the low and I'm in, and you'll have people really early on and you have people late on, and they'll be constantly trying to call a low. And it's a trap that you should not fall into if you are a shorter term trader, trying to call the low. Keep reminding yourself, I'm staying short until I see otherwise, I'm staying buy short. Doesn't mean you always have to short every day. You have to short if there's a face ripping rally, but it doesn't mean you have to go long either. You're positioned in line with where the momentum is. And the trouble is, when you start trying to be Mr. Clever and Mrs. Clever picking the bottom, is that you might get it and a bounce and you think, yeah, I'm right, and then it comes down, you get stopped out, you're missing the meat of what's going on, and you get caught in the trap of trying to be right as opposed to trying to make money. And I see that all the time, guys, on Twitter, and all the time on all those kind of environments. I say Twitter because you see it, with stocks and stuff that are just getting hammered. This is the bottom, this is the bottom. So I can imagine Twitter's going to be crazy over a bear market with lots of people saying, hey, this is the bottom, this is the bottom, this is the bottom, this is the bottom. And similarly as we have the bull market, guys, right at the moment we're in a bull market at highs. You've got the odd bearish guy who's been calling the top for the last 5 years. And you think, we've missed out. You may believe it is, and you may be right at some point, but you've missed out on the opportunity over this period of time by trying to be clever and be right. And by all means have that thesis, but then, price action rules everything. If the market's getting hammered day after day after day for whatever reason, then really you either want to be out or you want to be capitalizing on the short side. Anyway, guys, that's some bear market observations. If you trade through a bear market, give me a 6th or a 7th in the comment section below. Maybe we'll do another video and add some more of you guys' comments. Take care. See you next one. Bye-bye.